Okay, so let's preface this video with this is my personal opinion. So people ask me if my mortgage was up for renewal, which it actually is in July. What would I do with it right now? Okay, so given the state of the economy and rates and all of that nonsense, what would I choose for a mortgage? Okay, and I mean, I preface that with this is my preference because there's going to be a different reason and a different fit for everyone. For me personally, I would take a variable rate mortgage right now. The reason for that is because it's low. It's probably going to stay low because prime chases inflation. And if we look around at the economy right now, there is not a risk of the economy booming like crazy anytime soon. So we are guaranteed to have those nice low rates for quite some time. The other thing that people sometimes forget about variable rate mortgages is that you can also lock them in at any time. So typically you can lock them in at the going 5-year rate. Some lenders will also let us lock them in at the going 3-year rate. So if we see those fixed rates decrease during the current state of what's going on, you could have the potential to maybe lock into those lower fixed rate mortgages. Will rates go down? Who knows, right? We're on a timeline of a virus and we are not in control of all the things that are happening in the economy. We're just not. But recent history, so 2008 and 2009, we did see 5-year fixed rates as low as 2% or 1.95. So we know that they can go that low. Maybe there's the potential for that. On the flip side, I do have clients that are taking the 2.49, 2.59, 2.69 5-year fixed rates. And I don't fault anybody for that. Some people are just fixed rate people, right? They're not comfortable with the variable for whatever reason, or for budgeting purposes, they really need to know that that payment will never ever change for the next 5 years. And that's okay. I will never fault anybody for taking an interest rate and locking it in below 3%. Because let's be honest, like, you're beating inflation. That is not bad. My first interest rate was like 5.49, and it wasn't that long ago. So something below 3 is still really, really good. And yeah, so that's sort of what I would do if it was my mortgage. And I will say the caveat to that is if I was taking a fixed rate, or if I was taking a variable rate with the thought process that I might lock in if interest rates drop, I would definitely want to stick with a lender who uses a fixed rate IRD penalty that does not calculate a posted rate in that differential penalty. It's a fancy way of saying some lenders have higher penalties than others on fixed rate mortgages, and that I would want to avoid those, because at the end of the day, typically 6.5 to 7 out of 10 Canadians break their mortgage early at an average of 36 months. And so statistically, you're probably going to break your mortgage for a whole number of reasons, right? The negative ones like job loss, or divorce, or you have to sell your house and you can't buy a new one, that kind of thing. But also for some positive ones, like that interest rates drop. Right? The interest rates drop so much that it makes sense to break your mortgage and lock into new lower rates. We are dealing with an economy that we've never seen before. So there is potential for weird things to happen. I would want to position myself to take advantage of those if I could. So there's a lot of great lenders out there that have amazing products and amazing rates and great prepayment privileges and all of those things that come with a full service mortgage that do not charge as high of penalties as some of the other lenders. So I think it's just worth looking at and worth considering, because I think we really need to think about the exit strategy when we're entering a mortgage, not just the entrance strategy of what's it cost me right now. So if you have any questions about that, or you want to talk about options, or you want me to take a look at your renewal paperwork and see what they're offering and see if that's a good deal, or which one you should take, or what the fine print of that mortgage says, I am happy to do that at any time. 416-271-5307. Thanks.